Today, we're going to be delving into remortgaging. What is it? When do you do it? And why is it a good idea to remortgage? Hello, welcome back to our channel and podcast. My name is Gemma, and here at WIS we talk about all things relating to money, mortgages, and positive money mindset. So if that interests you, then be sure to subscribe to our channel and hit the thumbs up. It really helps with our YouTube algorithm and means that you won't miss out on any of our videos. On today's episode of Let's Talk Money and Mortgages, we have Iftikhar joining us. Iftikhar is a trained accountant and mortgage advisor who has been in the industry for over 10 years, and he is also one of the founding directors here at WIS. Hi Ifti, how are you doing today?
I'm very well, thanks Gemma. How are you doing?
I'm good, I'm enjoying the hot weather.
Yeah, it is quite hot at the minute.
Finally, we've got summer here in England.
I know, yeah. Jackets off and, a little bit more casual.
Oh yeah, well, today we're going to be talking about remortgaging, so let's get into it. So first things first, I think we should just sum up for everybody at home, what is remortgaging?
So when somebody buys a new house, generally what happens is they take for about a 25-year term or a 30-year term. But along with that, they strike a deal with the bank, and the deal is generally for a period of about 2 years, 3 years or 5 years. But when you finish that term, like the deal period, it's time for you to do a remortgage. If you don't do a remortgage, you go into the bank's standard variable rate. That's the normal rate at which the bank lends because you're outside the deal period. So that's generally quite expensive. Main high street banks charge about 3.5% at present for standard variable rate. But whereas if you're in a deal, it could be as low as say 1.5-2%, depending on the type of deal you are in. So if you don't remortgage, you'll end up paying 3.5% in that particular bank. So that's why it's very important that you remortgage. It's something that people need to consider if their deal is coming to an end.
So can you remortgage before the end of your term?
You can remortgage before the end of the term. Some people do that, right, for various reasons. Most people don't because they wait till your deal finishes because you're on a deal. So if you finish your deal before the deal ended, generally banks charge something called an early redemption charge, which is like a penalty. So therefore, most people won't break their mortgage before their deal ends. But sometimes people do because if they're on a very adverse rate, like somebody's paying, say, 3% and there's a good deal out there for 1.5%, which they qualify, if they have to pay a small penalty, which is sort of less than what they would pay normally, if they continue on this 3.5% or 3% rate, they would do that, right? So for some people, it does make sense to break the deal, but for most people, it doesn't make sense. If you are in a situation like that, what we would suggest is you speak to an advisor because they can do the maths and let you know whether it's a good idea to break your deal or not. And also sometimes people break deals for various other reasons as well. So you could do a remortgage because let's say, for example, you're trying to buy another property as an investment and you want to sort of come out of the deal and borrow more money off your existing property. People would remortgage. But if you are doing something like that, like I said, always seek advice because what happens is people need to know what the cost and the implications are if you remortgage. So it's always good to go for some advice. There are enough brokers out there who should be able to give you guidance on this one.
Yeah, thanks, Ifti. And I know a popular question that we get is, how long does it take to remortgage? So would you do the honours in answering that for us today?
Yeah, it's a very important question. Usually, if all things go well, it takes about 4 to 6 weeks to do a remortgage. But like I said, if all things go well, right? Given the current sort of circumstances, we are still in the middle of a pandemic. A lot of people are still working from home. Banks, solicitors, even surveyors don't go out as much. So given those kind of restrictions, we generally tell clients to talk to us about 4 months in advance at least, right? So if you talk to us 4 months in advance, we can arrange stuff because sometimes what happens is for some unforeseen reason, the bank might say that you can't borrow the money that you want. So for example, if the house valuation comes down, the bank might say, sorry, you don't qualify for that deal. In which case you may have to go to a different bank, right? So if you have to do all that, keeping your fingers crossed and hoping that you can finish in 4 to 6 weeks, may not be the best thing to do, right? So therefore, it's always best to be in touch early because, if worst case scenario were to happen and you have to go to another lender, that gives you enough time, right? So don't rely on the last 4 to 6 weeks to come to a broker and then do your deal, right? So do it much earlier than that. That gives you enough time. And if something goes wrong, you can always get it right. Most of the time, it doesn't go wrong. But like I said, there are unforeseen events sometimes that can deny you of having the mortgage you want, right? So, yeah.
Yeah, that was actually going to be my next question. When is the best time to do a remortgage? What would you say to that?
Okay, so like I said, I'd say 4 months in advance. But saying that, usually what we tell our clients is talk to us a year ahead, because then we can do planning. Because if somebody is going to do a remortgage, say in a year's time, we can come up with a plan. Say, for example, in a year's time, you might be at something like an 88% loan to value bracket, or you have 12% deposit in the house. But if you plan in advance, maybe you can collect that 3% additional, and that will put you to the 85% loan to value bracket, or you have 15%. So you can plan in advance. So it's always good. I mean, we always encourage our clients to talk to us at least a year ahead. Doesn't mean that you're going to do anything. It's just for planning purpose. Then again, touch base with your broker 6 months ahead to see whether your plans are in line, because house valuations might have gone up, it might have gone down. So you can plan things. And some banks nowadays issue offers which are valid for 6 months. So you can apply for a mortgage 6 months in advance as well. So there's nothing wrong, because offer is open for 6 months, right? So I'd say have the conversation a year ahead, then touch base with your advisor 6 months in advance, and you need to start applying 4 months. I think that's what I think might be the best approach.
To some people who are, say, on a 2-year fixed deal, saying to them, you'll have to come back to us in a year to sort of talk about it again, might seem quite daunting because it is such a long process. Would you say that maybe it's better to be on a 3-year or a 5-year? Otherwise, every year, basically, you're having to go back and think about this so far in advance? Or is there a reason why it might be good to stay on a 2-year and just do it every year?
Yeah, I think even if you're on a 5-year deal, personally, I feel it's a good idea to have a review every year to see where you are on your mortgage, whether there are better rates out there. Because your brokers might say, okay, you know what, even if you have to pay the early repayment charge, it might be best to do it because you can plan. But if you're on a 5-year deal and come back to your broker after 4 years, a lot of things could have changed during that time period. I'd say from your personal point of view, it's always good to sort of have like a financial health check sort of thing. Likewise, you have a mortgage health check to see where you are. So even if you're on a 5-year deal, I think it's a good practice to, book 30 minutes with your advisor and go through to see what you are, because things can change, right? Circumstances change for people, they get better jobs, sometimes there's additions to the family. There are a lot of things that could change, which can change the advice the advisor would give you. So therefore, I think it's always a good idea, even if you're on a 2-year deal or a 3-year or 5 years, touch base every year. That's what I think is the best approach.
Yeah, okay. Thanks, Ifti. So this is another question that we get quite a lot, because I think that there's a preconceived idea that you have to stay with the same lender when you remortgage. So is that true? Do you have to stay with the same lender?
You don't have to. A lot of people think you have to, right? Because the lenders generally write to you saying, oh, your deal's finishing. If you don't do anything, it's going to go up to the standard variable rate, which is more expensive, obviously understandable. But obviously they're warning you, which is a good thing from their point of view for sure. But from your point of view, you got to sort of see, okay, because this is your opportunity to see, okay, am I on the best deal? Am I getting the best deal from the existing lender? Or can I get a better deal from somewhere else? Right? So that's the best time, because you're not kind of bound at that stage. Because once you move into SVR, you're not bound to stick with the same lender because you finish your deal period. So if your deal period is over, you can always move out. That's the best time to shop around. There are people like us, brokers, who can help you with that, right? Because we will consider your circumstances. And we might be able to give you tips as well, because which might save you money. People who come, they tell us, oh, I never thought we could get a deal like this, right? So we hear that quite a lot. So it's always best to look at your options before making a decision. There are advantages if you're sticking with the same lender. Your documentation in getting the next deal is not as bad as going to another lender. Paperwork is generally a little lesser. But if it saves you a lot of money, you might as well look at that option, isn't it? So that's why I think it's always best to review that. It's not a matter of just, switching to a different product with the same lender. You can benefit financially if you go out sometimes.
Yeah, I mean, actually, for the people that don't know this, does it cost money to move lenders?
In theory, yes, it does cost money, because if you're moving lenders, there has to be a solicitor involved and there is a valuation that needs to be done. But the good news, I think this is the plus point, because the mortgage market is quite competitive, lenders have made these things easy for people. So quite often lenders pay for the solicitors, because they call it free conveyancing, and they also pay for the valuation. So when both of those are paid, though that's your main cost, right? So when that's gone, price-wise, you're now competing against the same lender. So that is very common in the industry. And sometimes if they don't have free valuations and if they don't have free legals, if that's not part of the deal, they quite often give you a cash back. They say, okay, here's £300, £500 towards your solicitor. And they kind of know what solicitors charge. So that kind of is enough for you, right? So you won't have to worry about it. But today it's quite competitive. So lenders will do a lot of things to attract clients from another lender.
Yeah. And can you pick your own solicitor even if the lender's paying for it? Or do you have to go through one that they've selected?
No. So long as they're on the panel, most big solicitors are on panels of the banks, right? So long as they're on the panel, you can choose them. It's totally down to you. You can choose your own solicitor. But if the bank's giving you free legals, just go with it, because quite often, that's the best thing. Because bank won't say, okay, if you're not using the solicitors, we will give you cash back. That generally doesn't happen, right? So therefore, if they give a cashback option, you choose your own solicitor. But if not, you ask your advisors, because quite often advisors know who will work to that budget, right?
Yeah, okay. So next question, partially kind of answered this one, but just to clarify, do you have to hire a solicitor every time you remortgage?
Yes is the answer if you're moving lenders. No is the answer if you're not moving lenders. But quite often what happens is you need the services of a conveyancer, not a full-fledged solicitor for remortgages most of the time. And generally it's quite cheap, and generally bank funds it, so you don't have to pay for it. And if the bank doesn't fund it, some banks give you cash back. So you can use that cash back towards the solicitor. So that's why they give you cash back effectively. So, yeah, you could use that.
And when you say quite cheap, what kind of figure ballpark are we talking here, just for those that just have no idea?
Okay, so there are some conveyancers who would work for £250. It could be £250, £300. If you go to a proper solicitor, they'll charge you £500. That's kind of what it is. Because I know a particular bank, they give you £250 to a solicitor, and that's kind of it, really. But there are solicitors who say, look, we will work a deal with that bank. So if you come to us, using that bank, we will work within your £250 budget. So that's how it works.
Okay, cool. Thanks, Ifti. So the next question that we have is, do you have to pay a broker to remortgage your property?
Why is the question? Yeah, a lot of brokers do charge fees. So obviously that's a fair enough question. A lot of people, the first question they ask us is, do I have to pay a broker fee? Brokers do charge fees. And I'm not saying that it's not within their rights. It is definitely within their rights to charge a broker fee, because what happens is they charge fees for giving advice and not for getting the product from the bank, right? So you could charge for that. It's perfectly acceptable. But there are brokers like us who don't charge fees, because that's, obviously it's a thumbs up, right, for a client who's looking for a deal, because we think we can manage within the commissions that the banks pay, right? But I do understand, because sometimes transactions are really small, because some banks, depending on the size of the transaction, pay very small commission, right? So if you put in 3-4 days work to earn that commission, it's generally not enough. So I do understand why some brokers would want to charge a fee. But from us, there's no broker fees, and there are a few other brokers out there as well who doesn't charge broker fees. Yeah.
And when you are remortgaging, a lot of people wonder, well, do I have to go through the whole process again, like everything, or is it a quicker process when you're remortgaging?
Remortgaging compared to purchasing a house, it's a quicker process for sure, because purchasing will involve doing all searches and things like that, right? It doesn't mean that with remortgages there aren't any searches, but you don't have all those complex searches, because that most of those are done already. It's mainly the title searches and things like that the banks get the solicitors to do. So that process is much shorter, but there is more paperwork involved for sure, because you have to make an application and things like that. But it's not as bad as you purchasing a house, because that involves a lot of work. I mean, it doesn't take days and days to get this done, because if you work with a reputable solicitor, they are quite organized. And it goes very smoothly. It's mainly that you have to submit those documents to prove your income. So once you do that, solicitor will send you a form to fill, and then you probably have the deeds to sign, right? But apart from that, they won't send you search results back to say, can you go through all these things, because that's when you purchase a house. So it's much simpler, but there is a process.
Yeah. So every time you remortgage, you still have to verify your income and things like that.
Yeah. If you're most of the time, if you're shifting lenders, within the same lender, you might be able to work something out, right? But if you're going outside, which a lot of people do, there will be income verification. And even with the same lender, depending on what you try to do, they might require documents. It's all for the best, because usually what happens is your rates come down, right? And you benefit from it financially. So therefore, it's always good to look at your options.
Yeah, definitely. So would you recommend paying extra money towards your mortgage when you remortgage, if you have it available?
Yeah, I mean, it's funny you ask that question because quite often when I speak to clients, I ask them, okay, do you have extra money? And they say, yes. There is X bank, Y bank, and Z bank. So what's this rainy day fund? What is this rainy day fund? And what is this? That's also rainy day fund, right? So you got 3 rainy day funds, right? That's why I say it's always good to speak to an advisor. Where there's no point you earning nothing there and paying 2-3% interest to the bank somewhere else, right? So as much as possible, it's always a good idea if you can settle off some of your mortgage. I'm not sure you've seen, but there's one of our videos out there as well, how to pay your mortgage off early. So if you do have fair cash, it's always good to settle off your mortgage. Because me personally, I wouldn't want to pay a mortgage when I'm in my later years, right? So that's something I want to avoid because I want to enjoy life and take things a little easy at that time. So therefore, it's always good to settle if you can. But if you're not sure, please do seek advice. That's always the best thing to do.
Definitely. So with that being said, we kind of touched on it before, 2-year, 5-year, what's best when you're remortgaging? What's going to get you the best deal?
Yeah, good question. There's no right answer to that. I could tell you some of the advantages and disadvantages of this. Again, there's a full video of us which cover this, which we did a few weeks ago. The key advantage with a shorter term deal is your early repayment charges are generally lesser on a shorter term deal. Okay, I don't know what I'm going to do in 2 years' time. Just imagine what I'm going to do in 5 years' time. I have got no clue, right? I mean, I have a rough idea, but it's life, right? You don't know. A lot of things could change in 5 years, right? Do you really want to, say that, yes, I am not going to move out of this house and I'm sure I won't have to pay a repayment charge and go for a longer term deal? It's a huge question mark for me, right? So that's the biggest thing, because if you do have to break that deal, people often end up paying about 5% penalty of the mortgage outstanding. So if you have say, 300,000 mortgage outstanding, you pay 15,000 as a penalty. That's quite a lot of money, right? So that's the biggest problem.
Yeah.
But usually the shorter term deals have lesser penalties, so therefore it is advantageous. Obviously, 5-year deals are more expensive, or long term deals are more expensive than the shorter term deals. But what we've seen recently, the gap between a shorter term and a longer term deal has narrowed quite a lot, right? So there's temptation for a lot of people to move to a 5-year or a longer term deal, but be very careful because you have this early repayment charge. And also, what a lot of people miss out with this thing is that even if you have, say, 50 basis points or 0.5% difference between the two rates, remember, if the interest rate is high, you're paying more interest than capital in the early years. So which means if you're comparing a 5-year deal against a 2-year deal, at the end of 2 years, your balance outstanding on the 5-year deal will be much more than the 2-year deal. So that's what a lot of people don't get, because they look at, say, there's only a 50 pounds difference, fine, I'll go with the 5-year deal. But remember, your balance outstanding is not going down as much as a 2-year deal. So you've got to take that also into account. If you look at those calculations, sometimes 2-year deals look more attractive. Again, seek advice on this. There isn't one solution for everybody. So speak to an advisor on this one. But there are a lot of things in favor of shorter term deals than a longer term deal.
Thank you, Ifti. So going back to what we were saying before about potentially paying off more of your mortgage, would you say that it's best to maybe borrow extra money when remortgaging?
Again, that's not something we generally encourage people to do, because that slows down you settling your mortgage faster, because the idea is to settle your mortgage faster and be debt free as soon as possible, right? That's the whole idea of getting a mortgage. But it's not the same solution for everybody, because sometimes we have issues where clients have heavy debt, they've racked up over the years, and they're paying heavy amount of interest on that debt. So in a situation like that, it may be worth considering converting some of that debt into the mortgage itself and settle that debt off, because you're not paying 20% interest somewhere else then, right? So there's no right answer to that. So there are situations in which we sometimes recommend to a client, but like I said, in situations like this, it's always best to speak to an advisor. Just because your friend did it or somebody else did it is probably not the best solution for you. So seek advice on this. But sometimes people do things like extensions to the house because that adds value to the property. So in situations like that, it's okay.
Yeah.
And also sometimes people do investments, right? They buy one property and invest into a bright-let property because it's making more money. It sometimes is a good solution.
Yeah.
Like I said, talk to your advisor, because it's always a good idea to do that. Because remember, you're racking up more debt, right? So you have to be very careful when you do that.
Okay, thank you, Ifti. So would you say it's a good idea to increase or reduce your term when you're remortgaging?
I'm always a big fan of people paying off their mortgage early, right? So because that's I'm a big fan of it because I want to be debt free as soon as possible. A lot of people want to do that as well. One of the ways you do that is to reduce your term, right? I think this is kind of a good time because interest rates have dropped a little bit. So if you have been paying 2% and now you're getting 1.5%, you're used to paying that, say, £1,000 a month or whatever it is. If you reduce your term now, when the interest rate is down, you might be able to still pay the same amount because you're used to paying £1,000 anyway, right? So, so for people like that, it's probably worth doing it. But this is something we encourage our clients as much as possible. Reduce your term. If you reduce the term, you pay off your mortgage early, and then, it's happy days, you're mortgage free and debt free, right? So that's ideally what you want to do. But there are circumstances in which we sometimes tell people it might be a good idea for you to extend the term. It's a pandemic situation. Some people have lost jobs and they've sometimes had to take a pay cut, right? So which sometimes makes their mortgage a little unaffordable, right? So for people like that, sometimes we do consider extending the term. But, if your income has dropped again, like I said, it's always best to speak to an advisor. The last thing you want to do is, income drop and continue to pay with the mortgage and struggle to pay that and you're unable to meet that obligation. It could lead to other problems, right? So therefore, it's always best to speak to an advisor in situations like this. Yes.
And the last question that we have for today is it best to do a fixed rate or a variable rate when remortgaging?
Again, the answer is it depends on circumstances and the individual. The key thing about a fixed rate is the rate will be fixed for that deal period. Like if you take a 2-year deal or a 3-year deal, it is fixed during that time. So if the Bank of England base rate goes up or the bank decides to increase the interest rate, your interest rate will not go up. But at the same time, if the bank decides to reduce the rate, your rate doesn't go down, right? But for budgeting purpose, fixed rates are always a good thing. So it depends on the time period as well. So if it is a time where we are expecting interest rates to go up, it's always good to fix it, right? Because, it's going to go up. If you're on a variable rate, your rate is, going to go up, right? So therefore, it's always best to do fix if you think the interest rates are going up. But if you think it's going down, it's probably best to be on a variable, right? Because you're expecting the interest rates to go down. As of now, the Bank of England base rate is 0.01%, right? So because it's 0.01%, it's all time.
Can't go much lower than that.
Yeah, that's right. So I'm not really sure it's a good idea to do variables at this time because I think the only way is up now, right? So therefore, it's kind of may not be the best thing to do a variable. Again, speak to the advisor because the variable products sometimes has its own benefits because some of the variable products, which are tracker products, they don't have an early repayment charge. So if you're thinking of breaking your mortgage after a year and moving to another house, it might still be worthwhile considering a variable rate. So there are some advantages having variable rates as well. Sometimes certain variable products are cheaper than fixed products as well. So therefore, there's no right answer for that. It really depends on the circumstances. Again, like I said, strongly suggest, this is why I always think it's always best to get some advice because there are a lot of these things like whether it's a fixed or a variable, which is 2 years or 5 years. It really depends on your circumstances. It's always good to speak to advice on these.
All right, well, thank you, Ifti, again for some great advice. And I just wanted to put a reminder out there that this advice may or may not be applicable to everybody. So please do check with an advisor if you're unsure if these are suitable for you. And if you don't have an advisor, I will leave our WS contact details below as we're always happy to help. Again, another little reminder that a mortgage is secured against your home or property and it can be repossessed if you do not keep up with the mortgage repayments. So thank you again for joining us today, Ifti. It was lovely talking to you. We'll be back next week with another episode of Let's Talk Money and Mortgages. Have a great day, stay safe, and we'll see you again soon.